Hello all. In this video, we will know about outstanding income. And outstanding income is earned income which is not yet received. That means that the income is already earned by the person, but the person still have to receive the cash. He has not yet received. The person is not yet received the amount. But in the future, they will be able to receive the amount. So that's why outstanding income is said to be an earned income. It follows an accrual basis. What it means? Accrual basis means that whenever the revenues and expenses are incurred, it has to be entered, not when exactly cash is received. It's not mandatory that whenever the cash is received, the transaction has to be entered. Not like that. If the if the transaction has entered, either you may incur expenses or you may earn the income, it has to be represented in the current accounting period. Even so, even if you not receive the amount at that particular time, if because that amount will be received in the future, right? So you got idea. That's why this outstanding income is also known as an accrued income. Let's see with an example. You rent out a building for 10,000 per month. You received rent only till February. March rent is not yet received by 31st March. So this 10,000 is outstanding income. So if the rent you have already received the services, being in building, staying in the building, or using that asset for anything, but the amount is not yet paid. You are going to get that amount in the future. So that's why that 10,000 rupees for March, which you have been already, is known as an outstanding income. So some of the examples are outstanding rent, outstanding commission, outstanding fees. All these are due amounts, due incomes that will be received in the future. But these are all occurred in the present accounting period. Okay, remember it. And let's see the nature of account of this outstanding income. So as outstanding income, what I said, the outstanding income will be received in the future. So it means that you are going to receive it, right? So what personal account says, debit the receiver. So outstanding income is a receivable amount by the company. That's why we are showing this outstanding income under personal account debit side, debit the receiver. So by this we are writing the outstanding income to the debit side. So what the personal account says, debit the receiver. That's why outstanding income will be debited. So this representative means here this representative means under personal account we have three categories, right? Under that representative person also we have. So this outstanding income will be represented under this representative, but it will come under casually, it will come under the personal account. So that's why outstanding income will be debited because you are going to receive in the future. That's why receive, this is receivable. And what will come under the credit side? So what we know that income, according to the nominal account, what the nominal account says about income, credit all incomes and gains, right? So here the income is credited. That's why whatever the income that we are having a due, that will be credited according to the nominal account. So what is the final journal entry of this? Outstanding income account debit to income account credit. So this is the important journal entry. So some of them will be getting confused with the outstanding income, outstanding expenses, like that. So remember, outstanding income is receivable. That's why we are showing under receiver, debit the receiver. Remember, like receivable, receiver, receivable, receiver under personal account. So personal account, so outstanding income account debit to income account credit. So remember this journal entry. In the accountings also, they will randomly ask this journal entry. So you have to say only this. Okay. And see, let's see with an example. As in the previous slide, we have seen that 10,000 is due amount, due rent that has to be received in the future. So we are entering that rent amount, outstanding rent account to debit 10,000 to rent account credit 10,000. I think you got clear idea. So let's see where is this outstanding income is shown. So under profit and loss account, it is shown under credit side of profit and loss account, and this outstanding income will be added to its specific income because what is matching principle says that all the expenses and revenues should be matched. In a current accounting period, whatever the expenses, whatever the revenues are occurred, all that has to be matched. Even if the amount is not exactly received, but if the expenses and revenues are incurred, it has to be matched. That's why even though this income is not yet received, it has to be added to its specific income to make sure that everything is matched. All the expenses and revenues should be matched. And why it is shown only under credit side of profit and loss account? Because under profit and loss account to the credit side, we will write all the incomes and gains. To the debit, we will write expenses and losses. But as we are talking about outstanding income, we will write it to the credit side of profit and loss account. Let's see under balance sheet. I said uh, the outstanding income is in a receivable amount that will be received in the future, but which has a future economic benefit. That's why uh, this outstanding income will be shown under current asset side. And this is all about. If you have any doubts, please ask in comment section and I will be responding. Thank you.